Hello, my name is Alvin Brown. I'm a tax attorney. Today I'm going to discuss IRS Collections. We get lots of telephone calls, people saying the IRS is trying to collect, they're garnishing my salary, they hit my bank account. These are serious things. The IRS collection on a salary is continuous. The IRS collection on an account receivable is continuous. And in my opinion, they always take out more than they should. They send the employer a schedule of what can't be levied, and then the implication is that everything else can be levied. What can't be levied are some nominal amounts that are prohibited from collection under law. But these deal with books and some small things, a small amount of cash equal to your deductions and your exemptions, and it's really minor amounts. And then potentially they can levy everything else, or that's the implication. The reality is this, that there is a statute that says, it's 6343 of the Internal Revenue Code, you cannot levy a taxpayer if it creates an economic hardship. I'll repeat that. Section 6343 of the Internal Revenue Code says the IRS cannot levy if it creates an economic hardship. The regulations under 6343 say that they define an economic hardship as money that if you don't have it, well, it's defined by what you need for housing, food and clothing, transportation, health, child care, taxes, things like that. All those are necessary expenses. And if you don't have income for that, that creates a hardship. So that's the sense of what the regulations do. The problem with these levies is that the IRS does exceed the law. And there's some things that I'm doing about that. I'm giving testimony on that to Congress. It's something that I think is wrong. It's something that they always do that abuses the law. Now, a collection can be stopped on a showing that it is creating an economic hardship. And so a levy can be appealed. And you can talk to the revenue officer or the service center who has started the levy. Boy, this is a big topic. The IRS is really loath to help anyone on anything if there's some unfiled tax returns. So they're going to be almost 100% unwilling to do anything about a levy if there's any unfiled tax returns. Let me qualify that a little bit. If you filed the last 6 years, if you're filed currently for the last 6 years, that probably would be okay. And that's a showing that you're in current compliance. That's the general. They normally don't look beyond 6 years. Some might, so I'm just giving that to you as a general thing. Before they start collection, they give you warning notices. So if you're getting notices of, hey, you owe some amount of money, you got to pay it. Those are warnings. When it gets down to a notice, what they call a final notice of levy, that can be appealed. So it would say final notice of levy. And if you have a final notice of levy, you certainly, they give you 30 days to do the appeal, you certainly want to do the appeal. You can appeal a lien, you can appeal a levy, and they call it a collection due process appeal. And in that appeal, you can introduce an installment agreement or an offer in compromise. The statute also allows for relief, innocent spouse relief. We do a lot of those things. So anytime we have a client, they get a final notice, we do the appeal for them. It's a fast-track procedure, and it works successfully. It's when you don't file that appeal that they hit the bank accounts and that they hit, they'll levy you your income and give notices to wages. You want to get on top of that before they contact your employer and garnish your wages. And good Lord, if they go to your employer, garnish your income, that's quite embarrassing with your employer. And a lot of people don't continue their jobs. They're dismissed by the employers if the employer thinks that they're not, current in their taxes. So it's a serious thing. But the thing that really has always troubled me historically with IRS levies is that they levy too much, and they invariably create a hardship. So you want to get on top of this early. You can appeal a levy, and very quickly, by offering an installment agreement. So if you owe, just picking out, let's say $20,000, and you see there's a levy, you pick up the phone. There's an ongoing levy. There's almost 100% probability they can stop the levy by requesting an installment agreement, assuming you don't have the full amount to pay the tax debt. The installment agreement, well, if you do that, you would want to call my office, and I'll give you some guidance on the terms that would be suggested for an installment agreement. And if you want to stop collection with an offer of compromise, I also think that you should call my office, and we'll give guidance on that as well. You might as well, the phone call is free, but what we'll do is we'll give you the best option, how to take it, either an offer of compromise or an installment agreement, if that's what you want to do. I sometimes like to have the offers of compromise filed normally in the normal channels to a service center directly without taking it to the IRS Office of Appeals. The settlement officers who handle the collection appeals have turned a little ugly in the sense that they become difficult. As it is now, I'm having better success, better responsiveness from the service centers than I am from the IRS Office of Appeals that accept the collection due process of appeal. They become increasingly aggressive and increasingly difficult, and when you get there, you can appeal any adverse decision they make to the tax court. However, the only issue that you can take to the tax court appeal is abuse of discretion. In any event, the topic today is collections, and you have to get on top of that immediately. Just to summarize, anytime you're getting notices from the IRS, you can call my office and we'll give you guidance on what that notice means. But do not overlook a final notice of levy. If you get a final notice of levy, you've got to appeal it. Also, a notice of lien, if you're getting a notice of lien, they'll give you 30 days to appeal it. Appeal immediately. They're not going to take away the lien, though. They give you a right to appeal it. It's a strange thing about that statute. They allow you to appeal the lien, but the options they give you don't have anything to do with taking away the lien. The options they give you are an installment agreement, offer of compromise, or innocent spouse relief. So it's a bizarre situation. Those liens are awful. They are going to be with you as long as you have a tax debt, and it's going to hit your credit report and stay in your credit report even 7 years after you settle your tax debt. So it's kind of a mean, vicious thing for the IRS to do. The other type of levy action, collection action, is bank accounts for businesses and receivables for business, which are continuous levies. Those are emergency things because the bank account for a business could have payroll and taxes in it, and those things have to be acted on immediately. And certainly, every business that gets a final notice of levy has to appeal that immediately. A levy on a receivable for a business will bring it down, because that's gross income. In any event, I've thrown a lot at you today. Call me if you can reach me at 703-425-1400. My extension is 106. I'm happy to take your call. Thanks for listening.